Amazon just announced that they will be getting rid of 30,000 workers. 30,000 layoffs, which is the biggest in their history. Microsoft cut 15,000 and Intel cut over than 22,000 workers. Only this year in 2025, more than 180,000 tech workers have lost their job. The year is not over yet, we don't know what's coming. And what takes my interest is that every company is giving the same excuse. We are restructuring for AI, we are investing in the future, and this bullshit. Some part of me believe that this wave of layoffs is not a sign of strength. In the opposite, it's the start of a collapse coming. And to support my opinion, I can tell you that these companies are not actually saving money, are not cutting costs. Instead, they are spending money more than ever. And the same reason they have to keep spending might be the same reason they will all fall together. Hello, it's Sawyer from Sawyer. Today we are connecting the dots that most of the people did not notice yet. How big tech layoffs that are meant to fund AI are actually creating a dangerous financial loop. A loop where each company's survival depends on others keeping the illusion alive. If even one stops investing in AI, the whole system will crack. Let's start with what they want us to believe. AI is advancing fast and it can actually replace a human to do the same task. So naturally, companies will start to restructure themselves. They cut jobs, they reduce costs, saying that they have to redirect their invest into AI. Mark Zuckerberg said that AI could soon replace a mid-level engineer. Amazon CEO said that they will need less people to do the same work. IBM literally replaced their HR workers with AI. All of this makes sense. I mean, it sounds logical, it sounds efficient, but there is a massive problem. The math doesn't agree actually. Those companies are not saving money as they are trying to do. They are spending hundreds of billions more than they ever did before. In 2025, big tech companies will spend more than $300 billion on AI infrastructure alone. And just to give you an idea about how much this number is big, $300 billion is more than the GDP of Finland and Greece combined. That's a lot of money. And here is the strange part. Most of this money is not going into innovation or profit. Instead, it's going into a closed circle of spending between the same few companies. Microsoft buys Nvidia's chips and rent cloud servers from Amazon's AWS, which is Amazon's website services. Amazon buys the same Nvidia chips and runs its AI on Microsoft Azure. Meta rents infrastructure from Google Cloud and Amazon Web Services. Apple doesn't even build its own AI system. It rents everything from Google, Microsoft, and Amazon. So the question that must be going into your mind right now is, what the hell is happening? What's going on? Apple pays Google and Google pays Nvidia and Nvidia pays TSMC in Taiwan, and then TSMC pays ASML in the Netherlands, and ASML sells machines back to everyone else. Billions are just circulating in a loop. No new value is being created and no profit is generated. And yet, investors are still rewarding them for doing this loop. The more they spend, the higher their stock prices go. It's a financial loop that is created to look like that there is progress, but actually there's none. Right now, the Magnificent Seven, which are Apple, Nvidia, Microsoft, Amazon, Alphabet, Tesla, and Meta, they are worth $17 trillion combined. A bit earlier, I told you how $300 billion are a lot of money and they are the same GDP as Greece and Finland combined. Well, my friend, $17 trillion are a lot bigger. Like, a lot bigger. $17 trillion is the same amount of money as half of the United States GDP. So these seven companies also worth more than most of the countries in this world. This is a lot of money, my friend, something that me and you cannot imagine ever. But here is the shocking fact. How much this 17 trillion worth of companies make profits? You will get shocked when you hear the answer. Their combined profit is only around $550 billion. Well, you will tell me $550 billion is a lot of money, right? It's a lot of money, I don't disagree. But this is a $17 trillion worth of companies. They should be making way more than this. That gives them an average price to earnings ratio of 35, meaning that investors are paying $35 for a profit of $1 only. Meanwhile, the rest of the S&P 500 trades around 15.5. This number is so huge. I'm going to have a cigarette and come back. I'm back, and don't smoke, guys. It's unhealthy, alright? So what makes this 7 so special? It's not the profit, and it's absolutely not real AI breakthroughs. It's actually faith. Believe it or not. It's actually faith. The belief that AI someday will make them unstoppable. That belief is what inflates their stock prices. And those inflated prices makes the stock market looks healthy. So when you hear S&P 500 hit a record high, what it really means is that these 7 companies went up and everyone else tagged along. But here is where actually it gets dangerous. These companies cannot really stop at this point. If any of these, if Microsoft or Amazon announces that they will stop investing in AI, their stock prices will crash. Investors will see it as a sign of weakness, as they are falling behind in the AI race. So what do? You tell me, what do? Yeah, they keep spending. It's a loop, they cannot stop. They need to keep spending, not because they are making money, but because stopping will destroy the confidence the people have in them. In 2024, Microsoft, Alphabet, Meta, and Amazon increased their capital spendings by 42%. In 2025, they will rise it for another 17%, reaching $244 billion just from 4 companies. And most of that money goes to Nvidia, which passes it to TSMC, which also passes it to ASML. I'm gonna say it again, it's a loop. Everyone can see it. A race where no one can slow down, no one can stop, because the first to stop will lose everything. So let's go back to the main point, the layoffs. Each layoff was justified as a way to free up capital for AI, but in reality they are cutting the very people who build these companies. Engineers, designers, marketers, support teams, the human foundation that creates the real value. They are replacing talent with spending, and that spending does not build new products. It just moves money between the same 7 companies. Now, imagine what happens if one of these companies slip out. For example, let's say that Nvidia's chips demand slows down. Suddenly, Microsoft and Amazon do not need as many servers, which will hurt Nvidia's revenue, and of course their stock prices will fall. That fall drags down the others' stock prices also, because investors will start to panic. If Nvidia is slowing, maybe AI is not as profitable as we thought. That will be the investors' inside thought, but not ours, of course, because we don't even have money to invest, but whatever. And since their valuations are tied together, one drop triggers another and another and another, like falling dominoes. It started with layoffs and spending loop, and then inflated valuations, and then if one company slows, the whole market's confidence collapse. And that's, my friend, is how the destruction will start. From the same layoffs that were meant to prevent it. But let me tell you that it does not stop with investors, it does not stop with Wall Street. Let's get into the political part, or the political illusion part, let's say. Governments are quietly part of this also. AI spending boosts GDP figures. It makes the economy look strong. So when stock market breaks a new record, politicians start to celebrate as it's a win. It's good optics, alright? Even if it's pulled on fragile ground. The Federal Reserve look at those high valuations and say, see, confidence is up, economy is good, economy is healthy. Meanwhile, real wages are stagnating and jobs are disappearing, and productivity gains from AI, that is the reason for all of this, barely exist. And here's the scary part. More than 37% of the American retirement savings are tied to the S&P 500, meaning that millions of people's future depend on fragile ground, fragile circle of these 7 companies. If one falls, people don't just lose investments, they lose the trust in the entire system, which is scary if you think about it. The real destruction will not come from AI itself. It will come from the moment one company blinks. When one decides, enough spending, we are not making money, we are spending a lot of money, enough spending, and investors finally sees the truth. That's when this financial illusion turns into a domino crash. Fast and loud. And ironically, it all started with layoffs. If you enjoyed this video, don't forget to tell me what do you think in the comments, because I really value your opinion and I would really love to hear what do you think of my opinion. And of course, don't forget to subscribe and to like the video and to share it between your friends if you find it interesting, of course. Always remember to invest smart and to stay curious, and I will see you in the next one. Peace.